Good evening and welcome to our presentation. We're going to be walking you through the updated Tier 4 charity reporting. So we're working with the Dunedin Commuity Accounting, and the aim of this presentation is to inform you about the Tier 4 reporting standards and the amendments to these standards for charities and incorporated societies.
So focus.
Cool. So first bit of the presentation is a little bit about the Tier 4 NFP standard. So this standard that is applicable for charities and incorporated societies, its aim is to provide for a simple format cash-based reporting requirements, which are applicable to charities and incorporated societies. Under the Tier 4 NFP standard, an entity, so your charity or incorporated society, is required to report the cash received and the cash paid during the financial year. So, for example, these are the transactions that are recorded in your entity's bank accounts and also petty cash that you may have on hand. The standard also requires an entity to report information about the main. Oh, sorry, sir.
People online can't hear you.
Oh, really? Right, a bit of a technical issue at the moment.
Right. So you might. Yeah.
Are we still muted, Rob, perhaps?
No. Right. Okay. So we've got. So we've got some people hearing it. So Nirashini, it seems to be you.
Yes, I can hear you now. Thank you.
Oh, can you hear now?
Yes,
Excellent.
I can.
We can hear you too.
Yeah.
Right. Brilliant. Cool. I'll give you focus back. And get rid of that. I know, I'll move that over here.
Sure. So if you could just go back to the slide one, please.
Yeah, there we go.
Cool. So a bit of a rerun. So I'm here to talk to you about the Tier 4 NFP standard. This standard aims to provide for simple format cash-based reporting requirements, which are applicable to either a charity or an incorporated society. Under the Tier 4 NFP standards, an entity is required to report the cash received and the cash paid during the financial year. So, for example, these would be the transactions that are recorded in your charity or incorporated society's bank account, or any petty cash that you may have on hand, which may come from donations or other means. The Tier 4 standard also requires an entity to report information about the main activities the entity has undertaken during the financial year to achieve its objectives. The purpose of this is you've got to report on activities that your charity has performed and the purpose that your charity is really serving to the wider community, or its function as a charity or an incorporated society. I'm going to walk you through some of the parts of the Tier 4 performance report. So a performance report must include the following parts. These are a requirement per legislation, so it's very important that you include these. Firstly, you need to have entity information. So the aim of entity information is to provide readers of your financial documents and your performance report with general information about your charity. So this may be the purpose you serve, some of the activities that you're undertaking, and perhaps members of the board that work with your incorporated society or charity. The second piece of the puzzle is you must provide a statement of service performance, which explains the main activities the entity has undertaken during the financial year to achieve its objectives. In essence, what has your charity or incorporated society done to achieve the goals, or perhaps your mission statement that you and the board have decided you'd like to achieve in this financial year. The third piece is you must provide a statement of cash received and cash paid for the financial year. This again is legal due diligence. You need to provide information for all donations or cash flow coming into your charity or incorporated society, and then account for all the expenses or cash outflow that has come out of your charity. And finally, it's recommended that you provide notes. This is to provide other useful information to support readers' understanding of the statements above. I think a really good example of this is if you have a family member that is being paid a wage by the charity, or there may be something that may be viewed as a conflict of interest. It's very important that you note this in your performance report, just to provide due diligence about this and cover the legal requirement. A little bit, what is a performance report? So in essence, a performance report is information that collectively tells the story of the reporting entity over the financial year. The performance report is used to tell, users of the performance report about your charity, the services it provides, its mission statement, its objectives, and other things that it may have undertaken during the year. And I've just made a little list below, so this could include entity information, a statement of service performance, a statement of cash received and cash paid, and finally, notes of performance report. A little bit more about Tier 4, a little bit of a meat and potato slide. Tier 4 is the smallest classification of non-profits. So this applies for organisations with expenditure under 140,000 a year for two consecutive years. This is really important that you meet this requirement to be classified as a Tier 4. If you haven't had expenditure under 140 grand for the 2 consecutive years, you may be classed as a Tier 3 or meet some other classification. So this Tier 4 apply to charities, incorporated societies when you're registered under the 2022 Act, friendly societies and credit unions, and finally agricultural and pastoral societies. So as you can see, this covers quite a wide range of different entity classifications. And it's really important that you use cash accounting. There is, as a Tier 4 charity or incorporated society, there is no need for you to use accrual-based accounting. And a bit of a definition for cash accounting is that figures are based on money that come in and flow out of your charity or incorporated society during the year. And in our opinion, it's the easiest way to account for your expenditure and your revenue. And in essence, it means that your accounts in Xero or in a spreadsheet, or however you account for your transactions, balance. A little bit about the new standards. So these new standards have been updated fairly recently. In May 2023, the External Reporting Board, or the XRB, issued updated Tier 3 and Tier 4 not-for-profit reporting standards. These new standards must be applied for accounting periods beginning on or after the 1st of April 2024. This is a legal requirement. And one of the major changes in this Tier 4 reporting is that the standard no longer requires a statement of resources and commitments. And I've just noted that if you have any issues with your preparation of your performance report, either come here to the DCA or look no further than the XRB standards reporting website. This is a really great place to check legal compliance and just to tick off some of the requirements. If you are unsure about certain aspects of your performance report, they have really great exemplars as well. You can use to base your performance report on, or just to clarify issues. And as I've said before, if you're still confused, please do come and talk to us at the DCA. When to use simplified reporting. This is applicable to Tier 4 charities and non-incorporated societies. So if you have a single bank account, you'll qualify for this Tier 4 reporting. If you have few or no other significant resources, so these are things you own, such as cars, land, or buildings, or premises, you qualify to use Tier 4 reporting. There are few or no significant commitments. So an example of this is a multi-year bank loan would be classed as a commitment. And you'd have to update your reporting, I guess, procedures and how you report if you did have a multi-year bank loan. And finally, if the charity has not entered into any other complex transactions, so an example of this is multi-year grants, or you're a subsidiary under a controlled business, you'll need to update from Tier 4 to another reporting requirement. I've noted some of the overarching principles I think would be really applicable to your charities and your non-incorporated societies. Firstly, integrity. I would advise that you act in an honest and upfront manner when conducting business. The second principle I've noted is independence and objectivity. So this is to be independent is to act with proper business protocols and to make decisions based off without conflicting interests. So these examples of such things may be arm's length transactions where you'll need to make a note in your performance report. That is a really important principle to keep in mind. The third principle I've noted is confidentiality. Any information that you receive through donate, a really good example of this is if you get a donation from someone and they don't want their name presented on the performance report, there is no legal requirement for their name to be posted, so you don't need to do that. And also just keeping donations and other financial information within the board, and to try and adopt an approach where people that need to see the information can see it, and those that don't, you don't need to show them. For competence, if you have an issue, please do come and talk either to the DCA or look to the XRB if you're unsure of certain requirements or things you may need to include in your performance report. If you don't have the knowledge, please do ask for help, because this will reflect really well on your charity or incorporated society. The fifth principle I've noted is passion. You should be passionate about your charity, and to really convey that to potential donors and to people that work with the charity. It's really your time to shine. And you should really try and aim to clearly communicate what your charity stands for and why you're, I guess, invested in this and invested in the community. And this is a reflection of everything that you do within that charity and all the good work that you've been doing for the community. The sixth point is consistency. You need, when reporting on figures, as per a legal requirement, the current year's figures are not enough. You also need to have your previous year's figures, and to be consistent in the way that you treat your accounting protocols, how you note your expenditure. If you're dealing with GST and you've been noting it as GST exclusive, please continue doing that for the 2-year period, so there's consistency in the figures that you're presenting. And finally, I've noted transparency. The performance report is a financial document that people may rely on, and is available to the public, so it should be as transparent and upfront and honest in your dealings and your mission objective as possible. And this again will reflect really well on your society. I'd like to pass on to my colleague here to take you through the next part of our presentation.
Thank you. So I'll just run through the first half of the simplified sheet that I've just passed to you guys, if you want to have a look at that. So probably the first step would probably to be going to the registers, the register charities search to look for your company. And that's where you can probably find your organization's rules or constitution and your previous performance reports and details like your official name and charity number. And the important documents that you probably would need for these would be your bank statements, your cash books, receipts, or anything else that you use to record any transactions, attendance records or reports on clients or events. Right, so we'll just step through the first part of the template, which is just the entity name and for the year ended. So the entity name is just quite simply the official name of your organization. And this can be found within the rules or constitution of your organization. And for the year ended, which is the year your financial year ended, or on the charity's website, it'll be called balance date. That's another term for it, which you will see on the next slide. Yeah, so for example, for DCA, that will be the legal name of the charity, Dunedin Commuity Accounting, and the balance date is your financial year ending, which is December 31st for DCA. And then going to the second part of the template would be the entity information. So this is just more detail regarding the organization. So entity identifier, which is your charity registration number or any other identifier, which you can find on the website. The type of entity, which is where it's either a charitable trust or an incorporated society, company, or any other registered charity. And then you'd also have your entity's purpose or mission, which is just like a couple lines of why you exist and what you're seeking to achieve, which could be like your goals or mission statement of your organization. And then you have your entity structure and governance arrangements. This is where you just briefly describe the structure of the entity, who makes the decisions about how the charity operates, what are the governance arrangements. And so this is probably a good place where you might want to actually say who is in charge. For example, if you have like 3 board members and like 2 treasurers, a treasurer and a secretary, you can probably put their names down, but that is more optional. It's not necessary, but you just need to give a brief description. And then you have your entity's main sources of funds and other resources, which is just declaring where most of the funding comes from for your organization, and if you receive any donations and how they are obtained. And then you have entity's reliance on volunteers and donated goods, which is just a description of how the entity makes use of volunteers, if this is a core part of how the entity operates, and whether you rely on goods and services. For example, if you're an entity that relies on donations of like computers, laptops, furnitures, that's probably something that you can write down there in the description. An example of this for DCA would be the next slide. So the identifier is just the CC 59524, which you can find on the charities search, and then the type of entity, which is a registered charity and charitable trust for DCA. And then DCA's purpose or mission is that DCA exists to provide free financial advice and supports the local nonprofit organizations aiming to enhance their financial literacy and sustainability, and it seeks to empower these organizations to better manage their finances, ensuring that they can continue to serve the community effectively. And then in terms of the governance, the board of trustees of between 3 and 10 people provide strategic direction and practical guidance, and the board appoints a coordinator to organize the services of DCA and work with volunteer senior accountancy students and chartered accountants to deliver the service. And then DCA's main sources of funds are mainly through grants from the government and non-governmental organizations, and also donations from individuals and businesses and sponsorships. In terms of reliance on volunteers, DCA relies heavily on volunteers to operate, and they provide pro bono accounting and financial services, which are crucial for delivering the charity's mission. And the next part of the form will be the statement of service performance. So this is really where it's your chance to let everyone know the great stuff that you do as an organization and how much of it. And you would probably want to check your previous reports to make sure that you're being consistent, as previously mentioned, because you have to show the current year as well as your previous year's findings. And this is more probably the section where you want to focus more on the performance of the organization rather than the figures, because it's really trying to show like what you're passionate about as an organization and what kind of keeps you why you exist. So for example, this is just example figures for DCA. The number of training events they held this year is more than last year, which is positive. And then they had more participants in training programs, and as well as number of whānau receiving support packages. And also something to note is that when you present these figures, it has to be something that can be measurable. And you have to have comparative figures like current year and last year. In terms of how long you want your statement of service performance, it can be as short as 1 or 2 sentences, or it can be as long as 2 pages. It's really up to you what you want to display in this section. And then I'll pass it on to Cam to go through the other half of the form.
Okay, so I'm just going to run you through the other side of that page you've been handed out, and I'm going to be talking about operating receipts and operating payments. So the purpose of this section is to report all the cash received and the cash paid out by the entity for all its activities during the year. And these operating activities are the day-to-day activities of the entity and include all transactions that are not classified as other activities. And these so operating receipts are what money comes in, and operating payments are what money goes out. And these need to be cash payments or receipts. And you can find these details from your accounting package or cash book, or by adding up receipts or your bank statement. So this is an example of Dunedin Commuity Accounting.
Sorry, hold it. Can't see the next, there you go.
This is an example of Dunedin Commuity Accounting's cash receipts. And so when you're doing these, you need to have an example of the current year. Categories that must be used to report operating cash receipts and payments. And these are the 5 categories here. These categories are donations, fundraising and grants, fees and other receipts from members, receipts from selling goods and providing services, bank account interest and other investment receipts. Donations received consist of donations or income from fundraising events or campaigns, or grant receives. And as you can see, most of our organization's income comes from this section. Fees and other receipts from members consist of membership fees, income from sales of goods and services to members, or donations from members, that kind of stuff. And receipts from selling goods or providing services is stuff like income from contracts, income from sales to the public. Bank account interest and other investment income consists of stuff like rental income, interest, and dividends. And other receipts are, for example, insurance insurance payouts or loyalties received, or gains from assets or sales, for example. An entity may use other category names if they deem it more appropriate to explain their transactions if they don't fit into one of these categories exactly. And for cash payments,
That's right.
it's a similar sort of thing. So it's also split into these categories of fundraising costs, payments to employees and volunteers, payments relating to providing goods or services, grants or donations paid, and other payments. So fundraising costs are just expenses incurred relating to fundraising, for example, marketing and promotion. Payments to employees and volunteers is stuff like payments made to compensate individuals working for the organization, whether they're an employee or a volunteer, or reimbursing volunteer travel costs. Payments relating to providing goods or services are things like costs associated with delivering organisation services or producing goods sold. For example, supplies, materials, contractor fees, utility bills. And grants, donations paid, kind of self-explanatory, just any donations or grants paid to other individuals or organisations. And other payments are miscellaneous expenses, for example, insurance, administrative costs, and for example, bank fees. So next we have the schedule of resources. So these are currently still in the standard, but for balance day ending 31st of March 2025, it won't be required by any tier 4 charities anymore. But for now, a lot of charities still want to put this in. And so the purpose of this is to provide information about assets owned by the entity at the end of the financial year, which is significant to the entity, and only significant resources should be reported. So if it's significant, it means that reporting it would influence the reader's understanding of the entity's performance. And what's significant for a small charity won't necessarily be significant for a bigger charity. So the organization is required to disclose these 4 things. So people. And these are regardless of whether they were purchased or donated. They should be reported at total monetary amount if easily available. Either the total amount paid to purchase the significant assets, or the total estimated current value of significant assets, which could be based off an estimated cost replacement basis or estimated sales price for land and buildings. And the source of value here is whether it's cost price, estimated price, fair value, for example. And if the entity does not have one or more of any of these items, they can be omitted. And the organization is not required to disclose every asset owned by the entity, just the significant ones. And for the schedule of commitments, this is again pretty similar to the schedule of resources. So the purpose of this note is to provide information about the liabilities owed by the entity at the end of the financial period, which is significant to the entity. And again, these are only significant if recording these liabilities could influence the reader's understanding of the entity's performance. And significant liabilities are the amounts which the entity owes to external parties, where the settlement of the liability cannot be avoided, which means that the external party can force the entity to repay this given amount. And so an entity must disclose loans and borrowings, amounts borrowed from other organizations or people, and money held on behalf of others must be disclosed as they are considered significant to the entity. Examples of this include commitments to purchase land or buildings, grants approved but have not yet been paid, and loans from a bank or other lender. And again, if the entity does not have one of these items, any of these can be omitted. And if total operating payments are greater than 125,000 for 2 years in a row, the entity will no longer be eligible to report under Tier 4 cash accounting and should report under Tier 3 instead. Okay, and now for schedule of other information. The entity is required to list any significant grants or donations received with any conditions attached. And they may want to, so for this, you describe each grant or donation that has condition attached. For example, a condition on how the entity should spend the money donated, or a time frame in which the funds must be utilized. They may want to report on the amount of significant grants or donations received which have not yet been spent at reporting date, and the nature of the expectations and conditions attached to these funds received. Including whether the grant/donation provider expects these funds to be returned. Okay, now I'm gonna pass it off to Ethan.
So I'll be talking about the notes to performance reports. The purpose of notes are to provide readers with a better understanding of your charity. There are 4 mandatory notes as seen here. Those are accounting policies, correction of errors, related party transactions, which is quite an important one for charities, as well as events after balance date. Next slide, please. So just about the treatment of GST. Within your performance reports, you can elect one of 2 methods. Option 1 is where all amounts are recorded on a GST inclusive basis. And option 2 is where all amounts are recorded on a GST exclusive basis. So you need to choose one of the 2 methods and follow it consistently. That's to offer comparability between your yearly reports. I'd say option 1 is probably the easier option, as it means you record transactions as the same amount as they're shown in your bank statements. GST paid or refunded can then be included in your other operating and overhead costs within your receipts and payment statement. So related party transactions. Who are related parties? Related parties are people or organizations with significant influence over your charity. So for example, office holders, committee members or managers, and close family members. So significance is, or significant influence is defined as people who have the ability to impact strategic or financial decisions within the charity. So continuing on, related party transactions are defined as a transfer of money, goods, or services between a charity and the related party. Related party transactions can be one of 2 types. So either they are of significance to the charity or are not on normal terms. So significance is a matter of judgment, and it's really up to you to decide what amount you consider significant. A useful indicator would be identifying if the omission of that information would affect a reader's understanding of your charity's financial position. So what that really means is if a related party transaction has taken place and you haven't included it, would it affect somebody's understanding of your financial position? Secondly, not on normal terms. This refers to transactions that occur with related parties that otherwise would be different. So an example here is, let's say you have a brother you have a member and his brother is a builder, and you need some work done on your premises. So you get your member's brother to do that work and he charges you $300. Whereas if you had taken this to the market, you would have been quoted $500. So essentially your charity has got a $200 discount because you have a member whose brother is a builder. There's nothing actually bad with this, it just needs to be stated. So then reporting of related party transactions. Charities are required to include the following information. So just a brief description of the related party relationship, then a description and amount of transactions during the year, and then amount due to or from related parties at balance date. So now on to events after the reporting period. This note tells readers about anything significant that happened after the financial year has ended. So it's really the period between the financial year end and before you've finished your reports. So an example here, suppose your charity has lost its funding. This information would likely affect decisions made by readers and therefore must be included. Within the note, you should explain the event, the estimated financial impact, and the effect on the charity's ability to continue. If you have no events, you can simply leave this blank or just state that no events have occurred. So now just a bit about the approval of performance reports. Performance reports must be signed for issue. This requires one signature. So you might be wondering who can authorize these reports. It does actually vary depending on your charity's rules, but most cases they are people in governance, so normally board or committee members. Then for the submission of performance reports, in order to complete your annual return, all performance reports must be fully completed. So you can submit your annual return on the Charity Service website. Now I've got the steps here. So simply log in on the Charity Service website. From your charity's dashboard, create an annual return, confirm the year of your annual return, complete the general information required, and then submit your annual return. You can save all progress at any time and come back to it when you need. As for guidance, Charity Services has made guidance available in quite a few different languages. So they offer a template where you can get help in these languages, as well as a file that has essentially guidance for you. So the languages are here: English, Te Reo Maori, Cook Islands Maori, Samoan, Tongan, Fijian, Hindi, Chinese Simplified, Chinese Traditional, and Arabic. And that pretty much wraps us up. I'll pass it over to Rob just to re-go over the DCA details.
Yeah, kia ora. So I'm Rob, so I'm the aforementioned coordinator. So thanks for the students for doing that. I think only one of you used your name. If you want to tell people who you are, do feel free. So thank you all. Is this the privacy you talked about?
No.
Yeah. And so a couple of questions came through actually whilst we're talking. So one of them was covered a bit later. So one of them was, in your first year, you don't have any previous figures to put in. And so the answer to that one's quite simple. You leave that bit blank in the first year, and of course the figures you put in this year are the year previous year, the year after. There was another question as well, which I will scroll up and find. And that was around, and we covered this, what tier report to use. If you use accrual rather than cash accounting. And the answer is, of course, tier 3. So tier 3, if you're larger than 140,000 a year, you have to use tier 3 or tier 2 or tier 1. If you're here and running a tier 1 or tier 2 charity, you're probably in the wrong room. Get an accountant, because those are massive. But tier 3 is still reasonably small organizations, under $1 million, I think. But if you're using accrual, you have to move to the tier 3, and it does ask you more questions. The reporting we've gone through is as simple as it gets, and it only goes up from there. So are there any other questions for our students? Feel free to come off mute and ask out loud if you're on Zoom. Oh, was everything covered? Nick, you always have questions. Come on. Oh, we covered everything. Well done.
Your notes, that you were recommending that we include notes, and you gave 4 categories, which I wasn't quick enough to make a note of. Can you refresh my memory of what those 4 categories?
We'll bring them back up again. Notes. we go. There we go. And so, and it wasn't a recommendation, it's a requirement. To include the accounting policies, correction of errors, related party transactions in events after the balance date. So those are the 4 categories you have to include, and you can include others. For instance, I think one of the things we see fairly often is that funders might want you to thank them. Basically, they want you to note that you got the money from DCC, and the notes are an opportunity, but you shouldn't split out in the accounts that it came from DCC, because those groupings are what we've got to use. But your notes are an opportunity to say we received grants from A, B, C, and D this year. And yeah, many funders require that you acknowledge the funds that came in from them. So we've got a recording of this, and we'll send out the slides and the recording. And of course, the Dunedin Commuity Accounting is available. And so we have appointments every Monday evening. You can come by Zoom or in person. And if you visit dca.org.nz, you can book online. You can give us a call on the free phone 0800 113 160. Maybe me that answers the phone, and we'd set you up with an appointment. You can come along, and lots of our appointments are people coming along saying, I think I've got this, can I check? So don't worry, it just, if you want some advice, come along and you'll get it. And those sessions are run by the students, and we always have a chartered accountant present who checks that you're getting the good advice. So for small nonprofits, it's absolutely an incredible service. Been running for over a decade now. Well over 100 nonprofits have come and got advice. And so if you are interested in just checking what's going on, or you've got specific questions, just book an appointment, come along, get the answer, and then you can go forward happy. So if there are no more questions, I'll again thank the students for doing this. A lot of effort bringing this together, and hopefully learn some stuff too for themselves. I'll thank you all, and everyone in Zoom, thanks for coming. And should have all your email addresses, and I'll circulate the details to you. We'll put that booking link in there as well if you want it. Or you can talk to me now if you're in the room, and I can set you up with an appointment. Thank you. Thank you all.